In the previous lesson, we talked about a couple key factors that inform investor confidence in a company, including growth and profitability. These key terms often guide decision-making for investors. Essentially, a company can drive value for an investor in two ways. One, by growing revenue or profits significantly and causing the stock price to increase, or by being very profitable and delivering money back to shareholders. This is called a dividend. There are some companies that investors don't necessarily expect to grow much, but might be undervalued due to their profitability. Often these companies pay out dividends to shareholders. Investing primarily in companies that are profitable might be undervalued by the market, and pay a dividend is generally referred to as a value investing strategy. Value investing is generally perceived as less risky, but also has less upside potential. Conversely, some companies are not yet particularly profitable, like Uber, and look to grow their company valuation through revenue growth. So they likely won't be paying dividends to shareholders, but instead, they'll reinvest money into the company and try to get more customers. Shareholders will gain value when the price of the stock increases. Investing primarily in these sorts of companies is called a growth investing strategy, which involves higher risk but carries more upside than a value investing strategy. You'll also hear a reference to large, medium, and small cap stocks. This is in reference to the size of the company in question. This chart is commonly used to indicate where an investment lands on the strategic scale. Now, being the savvy investor you are, you won't just dive in one of these strategies. It's often wise to try to balance these two investing strategies in your portfolio. Next, we're going to talk about different common types of stock market investments. Let's go. Be sure to like, comment, and subscribe to our account to get more videos like this right to your inbox. Be sure to check out Onomy on Instagram and TikTok. See you there.